All right, what is going on, Discord and YouTube family? Welcome back to another edition of Top Down Analysis with me, T. Hobbs. Here at the Trader Shop, we're going to be breaking down the NASDAQ, the S&P 500, the Dow, gold futures, volatility index, and then we're going to be focusing on some of the news and some nuances in the market. Things you need to know is that we are at a very critical level in this market. This is either a huge breaking point for the bulls to break out and go to all-time highs, or this is a very killer pivot point for the bears. All right, the bears to take us back down lower, that is. So a little something different today. We're going to break down each individual instrument fully all the way down to the 4-hour time frame. Then we'll move on to the next instrument. Therefore, if you just want to watch your particular instrument, I'll be able to slice the video up and put it out there as individual content. So starting with the NASDAQ, the most popular of the instruments, we'll start on the monthly time frame because why the hell not, right? If we take a look at the monthly time frame, the big thing that we need to understand is this low right here is in play now, right? The market or the bears absolutely have to defend this level, right? I would prefer, if they're serious, right? The bears are serious. I want them to defend November 1st low on the monthly time frame. Bulls are coming up here super aggressive. We're putting in a higher low. We've made a higher high, right? But we're still in a downtrend on the monthly. The first test of this downtrend was hit, right? Just like we talked about last week. The October 1st low was hit last week. We got as high as the 300s, 20,300s, which is what we anticipated, right? And we actually wanted to see us come into November low at the 20,500. You can go back and check the video. This is what we talked about last week. So we kind of underperformed last week. Like we were looking for about 6 or 7%. I think we only got about 3 to 4%. So the market underperformed, but for good reason. Buyers and sellers are probably consolidating in preparation for the big news week that we have coming on this week. So if you're a bear, if you're a bull, you want to see the market push right through these levels and start to push into the monthly candle from the third. If you're a bear, you want to see rejection at or near 677, right? The low of this candle is 20,666.50. You're okay if we trade into this a little bit, but you really don't want to see the market start to get back above March the 3rd pricing, right? Down back to the downside, we'd be looking for the market to retest some of the buyers that are inside of this wick, not really giving back the true week. Again, if you're a bull, but if you're a bear, you want to see this wick here from March taken out and start to dig into the lower wick of this candle. All in all, I have to give the nod to the bulls on the monthly time frame. But let's break down the weekly time frame. All right. Coming over here to the weekly, we can also see a couple things that are happening. First, we have a trend line, right? The trend line has been broken to the downside, right? Therefore, it's a signal to the bulls, right? That the bears that the bull run or the bearish trend or the bear flag that we were in has been broken, right? Now, the bulls still have work to do, or especially on the NASDAQ, because this level here, right, is very key. You can see we dug into that level. And if we really wanted to see bears step into the market, you didn't really want to see a strong close out of the April 28th candle. We got a strong close and they defended the lows from May 5th. Therefore, you got to give the nod to the bulls again on the weekly time frame. Now, for my bears out there, I will definitely build a case for you, but I'm just going to tell you it ain't that good, right? But I'm going to build a case for you when we get to the daily time frame. I'm adding in the 50 EMA, which is the black line. I'm also adding in the red line, which is the 200 EMA. The reason why I'm adding this in is simple. This Google search, you can do a quick Google search and it'll tell you that the crossing of a smaller EMA with a larger EMA, higher time frame, lower time frame, right? 50-day over the 200-day is a death cross or a bearish pattern that occurs in a short-term moving average crosses over a long-term moving average. Why am I bringing this up? I'm bringing this up because it's going to be relevant when we get to the daily time frame. We do have a death cross. However, the bulls are coming back. The other thing that I'll note for the bulls, right, because I am bullish more so than I am bearish, right, but not up here. I'd like to see the market pull back, but we'll see what happens. The other thing that I'll note that I've been noting every single top-down analysis is that this rarely happens. The market rarely taps into the 200 EMA on the weekly. And when it does, it's a sign that we're about to go higher, right? The last time we did it, 2022, December. The last time we did it before that, 2020, March, COVID, right? The last time we did it before that was December 18th. And the only time we've ever traded beneath it and stayed beneath it for quite some time is back in 2008 when the housing market crashed. So unless we're going to have some type of catastrophic, crash out of the market, which again, I don't put it past this administration, the bulls are still just in control. You gotta call a spade, right? So let's drop down to the daily time frame on the NASDAQ, and I'll go ahead and illustrate that death cross right here. The black line crosses down below the red line. The 50 EMA crosses below the 200 EMA, and they call that a death cross. Now, why is this important? This is important because if you trade ICT or if you trade supply and demand, you also understand that there's a couple things that are happening right here, right? If we zoom in into this level, we can see that there is a gap, an imbalance of price between the daily of March 27th and March 25th. That's exactly where price is right now. That's why this level is super key, because the market really, really, really needs to defend this level, because once we get above that level, we start to test the death cross, which also lines up with our levels that I was talking about, that October 1st level from 20,666 or 20,700. If we get back on the other side of this death cross and we start to use the 200 EMA as support, what will happen is the 50 EMA will cross back over, right, the 200 EMA, giving us a golden cross or something like that. I can't remember exactly what they call it, but it's something golden, and it's important. Ultimately, it's the flip of the bearish trend turning back bullish, and that is also being supported by the structure in which we're putting in higher lows and higher highs, and now we're at the current high, attempting to put in a new swing high, right? So what would I be looking for? I'd be looking for the market to take out this level here if I'm a bull, right? And then I want the market to come back into this level as a retest of this level. If I can find my ink pen here. I could have sworn it was in here. Oh no, it's over here. So essentially what I'd be looking for out of the market is the market to push up aggressively. And if you take a look at crypto right now, you'll see exactly what I'm looking for, right? But the market would push up aggressively, maybe gap up aggressively, and then use this as support later on in the week. This level being the previous high, right? 20,519 to 20,280 or 290. And then later on in the week, I'd be looking for this to be the buy to go higher, right? So we'll see what happens. That would be my bullish thesis. I'll give you more details when we drop down to the 4 hour. To the bearish side, what am I looking for? Well, it's kind of the opposite. I'd be looking for the market to, again, sweep these highs, immediately fail, break down these lows, and then come back here for a retest of this level, causing the market to fail and go lower. And then we start to trigger more downside, and we'll be looking for these lows eventually to the downside. Now you may say, well, that's a lot, but you need to look at the calendar for this week, which we'll also go over. All right, dropping down to the 4 hour time frame, I'm going to remove the 50 EMA and the 200 EMA. And what I'm going to do is I'm going to bring in my levels for the week in regards to the top down analysis, right? Every single week I do a measurement based off data, right? The average true range, right? What I'm looking for is a percentage gain for the week and where the market may deliver that from. The percentage gains for this week is the weekly time frame. Is the 6.67%. I believe it's like 1,500 points or 2,000 points. I don't know for the NASDAQ. Just whatever 6.67% is, right? That's what we're looking for bullish or bearish. So that's plus or minus 6.67%. Remembering that last week we underperformed, but we also didn't have a lot of news catalysts last week. So that makes sense. All right. So what are we looking for out of the market? If I want the market to trade higher, then I want to see the weekly candle open up to the downside first, meaning I want to see the market trade down to go up, right? Therefore, I'm looking for a retest of previous day low, chessboard low, but to the extreme, I want to see a retest of the weekly fib. That level sits at 20,575. And from that level, I like to see 6.7% take us up to 21,336.25. We have a monthly settlement target at 21,128.25, which the market could very well target as well for an underperformed week, but I doubt it considering we have CPI and PPI this week. Again, to the downside, if we can't trade as low as the weekly fib, because we had nice consolidation here, if we can't trade as low as the weekly fib, I like to see the market trade into the daily fib at 20,122.50, taking us back up again 6.63% up to the weekly projection of 21,455.75. That's my bullish projection. Now to the bearish side, the opposite has to be true. In order for the market to put in a weekly wick to the upside, it has to trade up first. Therefore, what am I looking for? I'm looking for the market to trade up into this red box, which is my daily supply, abbreviation DS is what you'll see when we go down to the lows. I'll be looking for the market to trade up into the daily supply, into the midpoint of the daily supply, about 20,411, because we have weekly settlement there. And the market loves to gravitate toward these settlement pockets first before trading down. If it trades back to the downside, I'd be looking for the market to tap into 6.54% to the downside, all the way back down to, you got it, 19,077. I'd love to see this pullback because I really don't want the market to pump for the month of May. I really want it to dump, but I'm going to follow structure as per usual. Again, if we can't trade even into the daily supply zone and we fail to go higher, what I'd be looking for is the market to tap into the in wall prior to going down, right? And retesting the in wall and coming all the way down 6.6% down to about 18,071.75. Now, what I will say is this is a huge week. This is a CPI week, right? And one thing that I've noticed is sometimes we do something extreme to start the week off, which is we gap down, right? And we aggressively target these levels, these data lows, to clean up all the gaps, right? Specifically this gap right here, right? We trade all the way down and everybody will be trying to long this, all long this, long this, long this. We trade all the way down, and by the end of CPI, right? By the time CPI rolls around, we're already down at the lows, and then I'm extremely bullish, right? So watch for us to drop down if they're going to be bullish. Watch for us to gap it down aggressively down to the sides. But if they gap it up, you know, we'll see how we play it, right? Because we can go gap up and go straight to these targets and then start trading back down based off our monthly and our weekly projections. So those are my thoughts on the NASDAQ. If that's all you wanted to see, this video stops here for you. For everybody else, we'll go ahead and move over to the S&P 500. All right, moving over to the S&P 500, you can see again, the same thesis here is happening on the monthly candle. I won't beat a dead horse, but what I will say is the market really needs to get above April versus high, because you can see versus the NASDAQ, we're not nearly as high, right, up to the upside. That's probably due to Tesla and the Mag 7 going absolutely berserk as of last week on talks of China deal from the Trump administration, okay? The levels still remain the same. However, we're looking for October and November 1st lows to be retested, and then February 3rd's lows on the monthly to be retested back to the upside. If you're a bull, if you're a bear, you want to see everything stop at about 58.50, right? You don't really want to see us get much higher than that. Remember, 19 days left in this monthly candle. The market has about 2 months to get back above March's high. If it doesn't, I'm going to become extremely bearish, all right? Moving down to the weekly time frame, again, it supports that same thesis that we talked about on the NASDAQ. We can see that these highs are very important for the market, and that's why we're kind of consolidating at them, right? The market really needs to get back above this high, but unlike the NASDAQ, we have not traded into this area, which makes me more and more bearish, right? And we've created what's called a spinning top or an evening star pattern at this level, right? What'll happen sometimes is the market won't get back above this wick at 57.40, and we'll trade straight back down, maybe not taking out these lows, but it'll definitely be a pullback on the weekly time frame. So I'll be watching for that again to start the week. for a nice healthy pullback before we potentially trade higher, right? But we'll see what happens. Dropping down to the daily time frame, we can see the same thing is going on, but again, we're going to drop in that 9 EMA, that 200 EMA and that 50 EMA, and we're going to point out the death cross, right here. Again, if you skip that video on the NASDAQ, just to reiterate, a death cross is a bearish pattern that occurs when a short-term moving average, typically the 50, crosses below the longer-term moving average, typically the 200. Essentially, it's a bear call, right? And we did get that bear call, which also lines up with a fair value gap and or supply zone, whatever you want to call it, right here, right, where the market needs to get back above. You can see in comparison to the NASDAQ, the S&P 500 is nowhere near that gap, right? Because the S&P 500 has banks and other, stocks in it, has 500 stocks in it. So those stocks aren't really in agreement. The Mag 7 is in agreement. We're going higher, right? So we'll see what happens. Dropping down to the 4-hour time frame, again, bringing in my levels and taking off the 200, right, and the 50 EMAs. We'll bring in my top-down analysis level, and I'll break down exactly where I think price should be headed on the week. All right. So the first thing I'll note is over here on the weekly time frame for the S&P 500, we have a weekly fair value gap that, again, sits inside of my bullish projection. We have a daily fair value gap, again, sitting right inside the monthly fib, which we haven't even got nowhere near right now on the S&P 500. So that's interesting. The market is in a holding pattern, but also in an uptrend. And we definitely broke structure right here, right? We didn't break the swing low, but we definitely broke these intermediate lows. So I'm paying attention to that because failure to get back above the highs and rejection puts us on the sell side of the curve, which is what I'm anticipating moving into next week, right? So if we're going to be bearish, right, or if we're going to be bullish, what do I want to see? I want to see the market hold the weekly fib or one of these weekly fibs and trade back up to this level at 5.41%, which is 59.76. Now, however this is delivered, the thing you want to focus on is the percentage gain, right? I'm giving a hypothesis, an educated guess on how I think it's going to be delivered. But by Tuesday, I'll know the answer. By Wednesday, I'll definitely know the answer, right? And then I'll just use this percentage to get me back on track with the true range of the week, all right? Monthly settlement, right? All the way down to monthly settlement, right, is where I would like to see the market trade down again, right, before we trade back up. Monthly settlement sits up here. What we want to see is a push up to 58.93.50, all right? I'm not seeing the monthly settlement on here. Did I erase it? Oh, no, it's down here. Okay, now that's weekly settlement. Give me a second. Let me pull this up because I want to be accurate with this. I want to make sure you guys have the accurate information. Oh, okay, I know why. Monthly settlement and weekly fib were in the same spot. So basically from this purple line, 58.90.50 up to 58.93 is 5.49%, or the weekly projection high for the S&P 500. All right. If I want the market to be, if I want to be a bear on the market, I want to see the market trade up first. So this daily fair value gap, or this big red box up here, I want to see the market tap into this and trade back down about 5.31% into 54.73.75, right? If I want to be a bear again and the market can't get back above this high, it starts to use this wick, right? The consequent encroachment of this wick from Thursday, May 8th at 10 o'clock. If it continues to use this as resistance, then it probably won't trade much higher than the previous day high. And we could pull from the previous day high, estimating down about 5.37%, puts us all the way back to 54.07, which again lines up with that gap on the 4-hour that needs to be filled, right? However they do it, they're gonna fill this gap eventually. I don't know if they're gonna do it this week, but this will be a good week to do it, right? They could come all the way back down, fill this gap, and still be bullish the rest of the week. Plus, the NASDAQ and the S&P 500 have this huge new day opening gap from back on April 22nd that has yet to be filled. The Dow Jones has filled it, but the NASDAQ and the S&P 500 have yet to fill it. So those are levels that I'm definitely going to be watching. And I'd love to see the market trade straight down. A gap down, straight down would mean we could participate in the shorts. And then by Wednesday, we could be looking to go right back up long, coming back up to fill that gap. So those are my levels for the S&P 500. Again, if this is the only portion of the video you cared about, you're welcome to join me or end it here or join me on the Dow Jones. Moving over to the Dow Jones, we have the monthly time frame here. Again, very, very, very suspicious on the Dow Jones, because the one thing I say about the Dow Jones is it's less manipulated than the NASDAQ and the S&P 500. Due to the fact that it has less stocks, right? It's harder to manipulate the small amount of stocks, right? So if you're looking at the Dow Jones, I look at that as true price action versus manipulation. It's true price action. And what you see out of the Dow Jones is weakness, right? I don't see strength out of the Dow Jones on the monthly time frame. I do see that the bulls stepped up, but I also see that the bears did their job, right? They took out these lows, as you'll see when we get down to the weekly time frame. And then you look at the Dow at the highs, look how weak the monthly candle is so far. Again, 19 days still remaining on the month, but this is really starting to lean me toward being more of a bear when we come up to these levels, because the Dow will tell the true story. If you don't know that, just go back and look it up. All right. So the October 1st lows, the November 4th lows, and the January/February lows are still going to be the resistance level we're looking for. So we're looking for a tap into 42,315 and see what buyers want to do from there. If we can't even make it up to that level, then we're going to be headed back down, targeting 39,112, and then eventually, maybe by the end of the month or the next 2 months, we're going to be targeting 36,725. Remember, this is a 3-month period, right? Well, this is the monthly candle, but over a 3-month period, it takes about a quarter worth of the new information for us to understand how detrimental tariffs are to the stock market. It doesn't matter about the deal. The tariffs are in place. They've already taken, they've already done something to the market. We just won't know until the end of this quarter. And the way that I'm looking at this is the more bullish we get, the more people they can trap with some aggressive news, right? So yes, I am a bull, but I'm not a bull to all-time highs. If we go to all-time highs, I'll still continue to to play that trend, but I'm just very suspicious, especially when I look at what the Dow Jones is offering here. All right. So again, we take a look at this level here, right? We take a look at this little pocket down at the weekly. This level will be key, right? Like the bears did their thing, right? The bulls are doing their thing, but don't forget what the bulls did here. The market needs to get back above this 43,178 level. And from a structural standpoint, even when it gets back above this on the weekly, I'm still going to be anticipating a liquidation of these lows before we travel higher with a double bottom, right? So I'm not anticipating a rally to the all-time highs, but again, I could be wrong. We'll just play it as we see it, right? But the important thing you need to note is this level that we're at right here is very important, and I don't think the market's going to break it right away. That's just my overall point. Breaking down to the daily time frame, right? If we bring out the 200 EMA, right? Again, with the 50 EMA. And if you skip the other videos, just a brief reminder that the reason why I'm bringing these out is because a death cross was formed on the daily time frame. It's a bearish pattern that occurs when a short-term moving average crosses over a long-term moving average, i.e. the 50 and the 200 EMA. All right, getting back over here, well, what do we have? We have that 200 EMA here, death cross 42,881. We have all of these sellers that came into the market and dropped price down. Again, the market will be targeting this liquidity. If you're a bear, right? If you're a bull, I don't think it's the best position to start call positions up here. Call me crazy, but I would not be longing the market from here. Okay. It could rally above, but best believe if it rallies above, it's gonna come back down and retest these levels. And at that point, you're good money to start buying the market, because this will not be the top anymore. It will be premium that flip to discount, right? Right now it's premium, and I will not touch this to the long side up here, right? Until we break above significant highs. I want to be clear on all my analysis. I am very, very bullish. I am just not bullish up here at these highs. It will not happen. All right. So let's take these 200 EMA off. Let's take the 50 EMA off. And let's drop down to the 4-hour time frame. Sorry, that's the 3-hour. Let's bring back our levels for the top-down analysis, and I'll give you an idea exactly where I think the Dow Jones can go for the week. All right. Take a look at the Dow Jones. Again, we're inside of the PM session high, PM session low, or what I call my chessboard high and chessboard low. If you're in the Discord, you know exactly what this is. Or if you haven't watched the video on exactly how this came about, there is a detailed video breaking down where the name chessboard highs and lows came from. Okay. So what are we looking for? We're looking to see if the market wants to go up, it needs to trade down first. Well, what do we have beneath us? We have two key levels. We have the weekly fib and we have the previous day low. Obviously, we have monthly settlement and all that good stuff, but I'm just going to look at these levels for starters. Okay. So if we want to see us trade down to go up, we're looking at about 4.86% on the weekly projection average, or the average true range, at 43,226. And then that's from the previous day low at 41,225. And then the weekly fib is right below that. They sit right on top of each other. So we'd be looking for about 4.85% at 43,329. Now, again, like I said in the previous videos, if you haven't watched them, the S&P and the NASDAQ, we could go straight down to the other weekly fib and monthly settlement and go straight back up. I did not put that in my thesis, but I understand that that is a strong possibility as well. And if that happens, I'll reevaluate my levels as we come down. Usually we come down and tap into these bearish levels, right? Very aggressively. We'll come in, close these levels, and then we'll start to head back up that 4.86%, which obviously would bring this down a little bit lower. Now, if you're going to be a bear, what do you want to see? You want to see the market trade up first, right? So we trade up thesis wise, right? We trade up into this consequent encroachment of this wick here, and or the DVI, daily volume imbalance is what I have here. So I'd be looking for the market to trade up into the daily volume balance, push down about 4.77% at 40,019. Okay. To the upside again, I'd be looking for previous day high at 41,622 to be retested. And then the market coming back down to 39,610 to put in the lows of the week. All right. So that's my breakdown on the Dow Jones. Again, if this is the only video you wanted to watch, you're welcome to end it here. Or if you're watching it all in its entirety, you can stick around while we break down gold, right? Gold as well. All right. Gold and the volatility index will be next, followed by news, and then we'll end it there. All right. So looking at gold, this is the reason why I'm more bearish where we are right now versus being bullish, right? The reason why is because gold, just like the volatility index, it's a fear and greed index. Essentially, people buy into gold when they see fear in the markets, and gold has been rallying at an astronomical pace, right? We have never seen gold this high in the history of mankind, and definitely have never seen it high this fast in the history of mankind. Therefore, in order for me to truly believe that the market is in greed mode, I need to see a sell-off on gold and the volatility index. And you can tell me what you see on the monthly, but I don't see a sell-off occurring as of yet, right? What we're seeing is nothing but higher highs and higher lows being placed on the monthly time frame. And so far, 19 days into this month, we tried to sniff the lows of the previous month, but I mean, not really sniff it, right? Like we came down to the 50% of the previous month and we held, and now we're just sitting inside of the body or inside of the previous month's wick. So it's going to be very key for gold, in my opinion, to get back above this aggressive sell candle and then start pushing above the 3,500s, right? If we look on the monthly time frame, what are we doing? We're consolidating at the highs, which again, some people view as bearish, but in gold, this has just been bullish, 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 bullish. Because what did we do? We got a rejection candle that created a new range from 21st of April to April 28th. And then we got back above that range and we weren't able to break back below the 28th of April. That is bullish. That is not bearish. That is very, very bullish. We'll see what buyers or what sellers want to do here, because if they really want to convince me that we're going down, I need to see them trade below 29.72. As long as 29.72 is intact, the gold is going up, the market's faking people out, and we're gonna fail and go right back to the downside. You can You can book that. You can clip it. You can do whatever you want. If gold goes higher, we will go lower. I'm just throwing that out there. All right. So now coming down to the daily time frame, again, we are getting a lower high being placed. We did break intermediate lows, but again, the swings are still holding, right? This is a swing because we got above this high. Therefore, 3207, just like I just talked about, right? And then 2970, as long as those two are intact, right? I'm still going to be bullish on gold, just not up here, right? I need to be clear. This is a drop. This is a base. I'm looking for more downside on gold, right? Until we hit these levels, right? And fill some of these gaps, right? So this week could be bullish for the market, bearish for gold, only as a retracement to go back higher, right? So we'll see how it plays out. But let me break down the 4-hour time frame. Again, we'll talk about, we're not going to bring up the death cross on gold because I don't think it's experiencing a death cross considering it's massively bullish, right? So let's take a look at where I'm looking for gold to go, okay? If we take a look, we're inside of the in-wall or the new week opening gap from April 27th. You can see we're finding sellers inside of this in-wall. As long as we're below this in-wall, I think the market could continue to trade lower. Hence the reason why I said I'm looking for pullbacks to go long, because I think the market's going to trade down before trading back up. Now, where can we head to? This orange box here is May 4th's in-wall. If I'm a bear, right, or if I'm a bull, I want to see the market trade down to go up. So if we trade down into the in-wall from May 4th, I'm looking for a rally of 5.09% based off the average true range, back into 3416.8. From the daily fib, right? If we just fake everybody out, we hold this level and we come back down to 3315.5. I'm looking for a 5% rally, getting back above these highs here and pushing back into 3480.1. Now, if I want to be a bear, which I do to start the week off, I want to see the market to trade back up first, retest this in-wall, right? Essentially trading back up and then pushing back into maybe the weekly fib at 3345.8, and then retracing all the way back down to that level that we spoke about below 3210 and then into 3179, right? The chessboard low. This is the classic gap and go on gold. If you've ever traded gold, if you've ever been a part of any of the sessions we've had with gold, you know that this thing likes to gap and keep going from the lows or the highs, depending on how bullish or bearish it is. This is a very trendy asset. So when we're consolidating at the lows, a lot of times we won't even get this price again. We'll get a gap down and we'll just keep going. And from the chessboard low, what I'd be looking for about is 4.98% down to 31.59. So I'll be watching gold at the open very closely today. I love to trade it in the Asia. I love it the 1800 time frame and the 6 p.m. time frame and the 8:45 p.m. time frame. If you ain't learned nothing from this video, you probably should go back test that. All right, so those are all the levels for all of the indices and gold. Let's break down the volatility index, and then we'll push over to the news, and we'll go ahead and end all the videos here. All right, moving over to the volatility index. Again, this is a fear and greed index. I'm only going to go over the daily time frame because it's the only one that matters right now. Okay, the daily time frame, we're below the weekly, so we're in discount. That means that I'm looking for buys out of the volatility index, but not in the middle of price. I want to see the market fill this daily volume imbalance, daily fair value gap, whatever you want to call it. This previous high will be retested, right? Once we get back into the 18s through roughly about the 14s, that's when wherever the market is, that's when I'm going to start looking for shorts, because I'm going to anticipate the VIX finding buyers here, right? Which means that the market should find sellers wherever it is. Now, other things that could happen. We swept on the daily. We swept this established high here. We're coming down and sweeping the established low. The market doesn't need to go back and fill this gap. We could very well stop here and put an aggressive candle back to the upside, use this weekly fib as support and start to push back up to these highs. If that happens, that means that we failed at all of those key levels that I spoke about on the other indices. And that means that that death cross is holding, and we're going to be pushing much, much higher and will probably be followed by some very, very bad news, right? So just be on the lookout for that. I'll be calling it while we're in the Discord, and just pay attention to all of that. All right, moving over to the news on the week, right? What do we have for the week? The news on the week is very, very easy. It is the best week that I love to trade. It's the second week of every single month. We always get CPI data. Whenever we get CPI data, you can expect some extreme volatility. You can expect some larger moves. I like to size down and make my money the easy way, right? So Monday, there's no news. Expect for the market to make a big move on Monday. A lot of people say, well, don't trade no news days. I completely disagree. Expect for the market to make a big move on Monday, either in Asia, London, or New York, right? In preparation for CPI. Remember, to fill positions, yes, they do it in consolidation, but to really get their positions filled, they have to expand the market, right? So Monday, again, no news day, but I expect a big move on Monday. Tuesday, CPI, 8:30. Expect a big move on this day because I think that this may be a part of the bad news or part of the good news. One of them is going to be bad. Something's going to happen this week, right? In my opinion, that's going to move this market in a massive direction, either to the up or to the downside. I've already given you my thesis on which way I think that I'm leaning toward. All right, moving over to Wednesday, right? If we take a look at Wednesday, nothing really going on that day, but this is usually a trending day, meaning Tuesday, we will get the information or the reasons to buy or sell. Wednesday, we will get the continuation and extreme push to the up or downside. By Thursday is usually where the market likes to turn around, right? And lo and behold, we have core PPI, retail sales, and unemployment claims. Not to mention, right before the market opens, Mr. Jerome Powell, Mr. Red Tie himself, Mr. Screw Your Puts, Screw Your Calls himself, is speaking right before the market opens, right? So if you don't think that this is going to move the market, we'll see what happens. But PPI and retail sales is enough. He's probably not even speaking about anything, right? He's probably just giving a conference call. Yeah, you can even see due to delivery opening marks at the second Thomas low back. From my experience, this usually is a nothing burger, but the market still will react to core PPI and core retail sales, right? So just be on the lookout for that. And then finally, we end the week on Friday with what I like to consider the new CPI and the new PPI, because if you go back and look at the reaction from the consumer sentiment from the University of Michigan, ever since they started calling for higher inflation, this thing has been a market mover. So 10 o'clock news on Friday, right now, I'm telling you, be aware, because this market will get to juking off this news. If they bring their revisions down, it could be a massive move to the upside. If they start to continue to say, no, this is bad, then look for a massive move to the downside. That being said, I know that was a lot, but like I said, I'm going to break the videos down in short form content. Probably will be about 10 minutes per video. And if you guys want, you can go back and watch the specific instrument that I broke down: NASDAQ, S&P, Dow Jones, gold, volatility index, and then the news section of the video. That being said, thank you guys for watching. My name is T Hobbs. This is The Trader Shop, and we'll catch you on the next one. Peace.